Investing News Network, and here today with me is Brien Lundin, editor of Gold Newsletter. Thanks so much for joining me today.
Great to be with you, Charlotte.
Great, and we're here at PDAC. It's day 3. I know you've been very busy.
Yes.
How is the conference feeling to you so far?
I think it's okay. I don't think it's boiling over with enthusiasm, but there's not a sense of pessimism. You know, of course, people would be more optimistic a week ago than they are now because gold in the last couple of sessions has dropped a good bit. But I think people look at is that it's a short-term phenomenon, and they're still fairly convinced of the long-term story for gold, which I think is bullish still.
What do we perhaps need to see to have gold go higher? Can you share any insight there?
Well, now that it's dropped below 1,300, it needs to get back above that, and frankly, it needs to get back up 1320. From there, the key points are the 2016 highs, around 1370, 1372 exactly was the 2016 high. If we get to that point, I think buying momentum will have a lot of generalist traders coming into the market. That'll take us to 14 pretty quickly, and that's a really big number for gold. That's after 1400, there's very little resistance before you get up to near the old highs around $1,800, $1,900. So if we get up to the high 13s, get past that 1372 key point, I think that's a level that will really take gold higher very quickly.
Can you talk a little more about these particular levels that gold needs to hit? Is it all psychological? How does that work?
Well, a lot of it's technical, a lot of it's psychological. The 1372 levels, what I look at as the 2016 high. A number of other people look at a downsloping line with the peaks since 2016, and they put the resistance level around 1350, 1360. Personally, I'm not a real avid or accomplished market technician, but I'd like to see it exceed that 2016 high. I think that'll bring in a lot of generalist buying into the market. $1,400 is less a technical level than a psychological level. It's one of those big numbers. And once you clear that, I think you'll get a lot of people coming into the market. The actual technical level for gold is around $1,417. But if we clear that big number at 14, I think we'll clear all of the technical levels associated around that area very quickly.
How do we see the gold stocks performing as we have this lower price level?
Fairly well. That's been the one encouraging thing, I think, is that they're holding up so far fairly well. I have not been encouraged by the action over the last couple of days in gold. You know, supposedly one of the reasons why gold hasn't been performing well recently has been the prospect of a China deal. But as we all know, a couple of months ago, the prospects of a China deal were supposedly bearish for the dollar and bullish for gold. For some reason, and the consensus is flipped on that, and it seems like a China deal was being viewed as bearish for gold. I don't like that that's happened, so that has me a little cautious about gold right now. But I do again think the long-term story for gold is bullish, and I think the stocks are reflecting that, and that investors aren't bailing on the sector. The smart investors aren't, at least.
How do we see the recent mergers and acquisitions continuing to impact the space?
Well, it's kind of agitating the market, and I think that creates opportunity for the juniors. You'll have projects that will be spun off, released to the market. That's kind of exciting from the junior space. I think the big one, of course, is Barrick Newmont. I don't think that Mark Bristow is going to be able to pull that off. I'm one of those people that think it would be a great deal for both companies because I have a lot of faith in Bristow as a manager. I think he's just worked wonders at Randgold, and he's proven to be one of, if not the best, managers in the gold mining industry. But I don't think the market is ready for a no premium deal at this point. I don't know that they're going to see that, and I think it'll probably end up with some kind of a JV arrangement in Nevada.
Would you expect to see this mergers and acquisition activity spreading to, like, outside of gold into other commodities?
Possibly so.
Maybe.
Possibly so. I think what you want to see, and I think what you're kind of seeing right now, is some positivity in the gold price is bringing the majors and the mid-tiers looking around and saying we really have to do something while we still have time, because these bargains, there's still a lot of bargains out there, even at the current gold price. If the gold price goes up, these things are going to be priced much higher. So there'll be a bit of impatience in a rush to get projects while you still can, kind of a buying frenzy. If we get a sustained rise, if we get gold in particular up to those higher 1300s levels, I think you'll see the M&A market really perk up. You'll probably see some copper projects and zinc projects joining into that as well, because I do like both of those markets going forward also.
So we may be starting to see companies beginning to position themselves for this.
Yeah. I think I have a good long-term view for copper and zinc, and that may be a little slower to develop. Nothing really gets markets, investors, and people in general excited like a gold bull market, but a gold bull market tends to spawn excitement in all the other areas. One thing I tell people is that there's never been a copper bull market, a zinc bull market, a diamond bull market, a rare earth bull market without a backdrop of a gold bull market. That's what brings investors to the table. That's what drives equity prices higher.
Well, it's good to hear some positivity about the base metals. I know they didn't have a great time last year.
Right.
So we'll see some improvement, copper, zinc, nickel, or just the copper and zinc?
Yeah, I think that the trade issues are what brought the base metal prices down, and that's kind of an exogenous. I've always viewed it as a temporary factor that's pushing down on base metal prices, so I've thought it's been a good bet for some while, because those trade issues have to be resolved. Both the U.S. and China absolutely are codependent at this point. They need to make it work, and they'll find a way for both sides to claim victory at some point. When that happens, I think you'll see, and as that's happening perhaps as we speak, I think you'll see a resurgence in copper prices, particularly in zinc a little further down the road.
So investors should be probably looking at those commodities, and then within them, should they be looking for companies that maybe take over targets, companies that may be buying the assets from?
Yes, you want to look for companies that are that have large established deposits or growing deposits. To some degree, some of the smaller copper producers, I think, would be primed for takeovers by some of the larger companies down the road. But there are some companies out there, and we follow them in Gold Newsletter. I have a few recommended companies in the sector in Gold Newsletter that are building resources or in production and building production that I think are highly leveraged to move in copper and zinc prices.
So we've talked a lot about M&A activity. Are there any themes in the resource space that you think investors may be missing or they should pay more attention to?
I think if you're looking for a good move in gold and silver, you want to find those companies that have large established resources, usually with economics on them, that they'll move first. And if we add another $50 to $75 to the gold price, if we get close to $1,400, a lot of these companies, a number of these companies will be trading at 100 to 200% of the levels they are right now. So I think that's one story. The other side of the story is there's always some interesting exploration stories out there. And you can always find those. In some cases, a really good exploration story can work independently of the metals markets. And that gives you, ironically, a little less risk because you don't have that factor working against you, potentially.
Okay, well that was great. I think we'll leave it there for now. Thanks so much for coming.
Great to talk with you as always, Charlotte.
Great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Brien Lundin.